and check me out. All right, let's talk about the mystery charts and the methodology in action. This is one we talked about last week, and I went into a lot more detail. So if you go in and watch last week's week of charts, or I have a playlist called Methodology in Action on YouTube. So check that out, youtube.com/Dave Landry. But anyway, there's the parameters down below. It's the first one in the list. Entry is here, stop is there, initial profit target is up here. This was a double top knockout, and then it became more of a pullback. And it's a fairly deep pullback and fairly long pullback, but I still think it's worthwhile given the big blue arrows and everything else. Bigger picture wise, it still looks like it's in a great trend. Here's another mystery chart. And what's cool here is lots and lots of Landry light is illustrated below about 50 bars before it pulls back to the moving average. In case somebody's new to my methodology, the illustrator below, I like to call my indicators illustrators because they don't indicate anything, they just show you what's already in the chart, is a count of how many bars, how many lows are above the moving average or how many highs are below the moving average for downtrend. So nice uptrend. You can just eyeball it, you can take a look at it and see, or you can look at the Landry light and notice it comes down to 0 when it intersects the moving average. That's a Landry light pullback. The other thing too is notice that this is a very persistent move higher. Persistency mathematically is equivalent to linear regression, but I just like to draw a line through as many bars as possible and often just eyeball it. But anyway, there's the parameters. Entry is here, stop is down here, and initial profit target is up here. And so far, it hasn't triggered. Here's another mystery chart. In fact, we're going to give this one a reveal. This is VG, and the parameters are down below. You can see entry of 1745, and then the stop is at 1195, and the IPT is 2295. And percentage-wise, that's a big number, or those are big numbers. But if you look at the chart, they're not that big given the volatility of the stock. And you can see it was headed higher, and then it began to accelerate higher. And there's your Landry light there. Also, as mentioned last week, bigger picture cup and handle working. It's good to have these classical technical analysis patterns sort of as a backstop to what you're doing, and not necessarily trade them in and of themselves, but it does help to pay attention to what's going on with a bigger picture technical analysis, and then have your setup within that bigger picture technical analysis, kind of like the Russian doll theory. Anyway, the stock pulls back, hits a moving average, Landry light goes to 0. That's a Landry light pullback. Entry is there, stop is down here, initial profit target is up there. So far, not so good. We're going to come back to all these in just one second. Here's BTM, which was not a mystery chart because it's set up, and I recommended it in between shows. By the way, if you want to look at the archives of these, and warts and all, DaveLandry.com/archives. And if you want to see the newer ones, and I started this a few months back, I started putting it on YouTube much more recently because I have international clients, and they're using YouTube to translate. And so I also post the services to as a private video, and then after about a week or so, depending on when everything triggers, I go ahead and make those public. So that's youtube.com/Dave Landry, and you can find the playlist as Dave Landry's core trading service. Anyway, lots of Landry light there, pulls back to the moving average. There's all your parameters down here. The entry was 580. We haven't moved the stop yet. The stop was 415. Initial profit target of 760. Let's take a look at that on the chart. Entry, stop, and then IPT accordingly. We take half of the position off at the initial profit target, the IPT, and then we bring the stop up intraday to break even on that. And the idea is to establish a free position, and that's one of the million little things. If you can establish enough free positions, you'll do quite well longer term. Anyway, just real quick, because we kind of beat the dead horse on this TFM 10% system, it's starting to get a little traction. I'm getting some feedback on Twitter and other places based on this, and some people have really taken the ball and ran with it. I'm gonna have to research that. Is it run with it, ran with it? I always get that messed up. But anyway, we had a sale not too long ago, and then I guess you could argue that that was a bit of a whipsaw signal. It happens. And we had 2 bars of Landry light, and the buy was right there. And if you go in and watch last week's methodology in action, you'll see, or the weekend charts, you'll see that I talked about how I don't like buying on weakness, but that's this. When I designed the system, I didn't think about that sometimes you would be buying on weakness. I prefer to wait for the market to turn back up, which it did, obviously. And so far, so good based on that signal. All right, let's talk about the Landry 100. Now, I have done a little bit of experimenting with this with live money, but for the most part, this is just kind of a proof of concept thing. And so far, it's been wonderful as far as analysis is concerned, which I'm going to get into quite heavily in just 1 second. And it's been kind of fun to do. I know you want to party with me. But the main thing is, as I've been saying quite a bit, speculation is alive and well. And all of these stocks, now this is the first, I guess, 50 or so, you could see, and I have them sorted by percent change. So this list looks really good. The bottom of the list doesn't look quite as good. However, you got to remember that we're doing a constant window dressing or reallocation, however you want to look at it. I guess window dressing would be the best way to look at it, where we're putting good stocks in and we're taking bad stocks out. Reminds me of a story. I was going to add this to one of my articles. I've said it 1,000 times, but years and years ago, I walked into the gym and I had a long face. I was all pissed off because I lost a lot of money in stocks. And on that particular day, the girl behind the counter is like, "What's wrong?" Because I tend to wear my feelings on my sleeves. I cry like a schoolgirl when I'm forced to watch a Nicholas Sparks novel, as I've said quite often. I also cry like a schoolgirl when I willingly watch a Formula One documentary. They usually end badly, FYI. But anyway, so I walk into the gym. She's like, "Oh, I love face. What's wrong?" And I was like, I'm in a bunch of bad stocks. And she said, "Well, sell them and buy some good ones." I was like, "Oh, what do you know? I got an MBA." Apparently, she knows a lot more than me about trading. So basically, you take the bad stocks out and leave the good stocks in. If you could just do that in life, in actual trading, you probably would do okay. Now, all these are bought at new highs. I'm not suggesting you rush out and buy a bunch of stocks at new highs. Actually, I am suggesting, if that's the way you're going to do it, buy a bunch of stocks at new highs. Don't just buy an individual stock making new highs, because the chances are it's going to correct fairly sharply and you're buying into the overbought situation. But if you buy enough of them, eventually you catch the 200, 300, 400%, and occasionally 3,000% move with this type of trading. Breakouts, as a general statement, usually fail, okay? However, if you buy enough of them, you'll be successful. So somebody, I think it was Jeff in here, was talking about maybe you don't quite need 100 stocks. I'm not sure how you would go about that. And the problem that I have, and I have a client, he's really smart, and he sends me a lot of stuff that's where he uses statistics. And my only problem is markets aren't normally distributed, and you got to be really careful when you start using statistics and mathematics, because remember, you're dealing with emotions. I was trying to explain to an older guy in the gym this morning how markets work, and I think he actually understood what I was saying, as opposed to some younger guys. They're always trying to, like, well, what about tariffs? What about this? What about that? And what about the situation in Nigeria? And the thing is, markets move on psychology, and a lot of people buy and sell for a variety of reasons that have nothing to do with the underlying market. As Tom McClellan's mother said, late mother said, paraphrasing, some people buy when they have money, some people sell when they need money, and others use far more sophisticated methods, and many of which have nothing to do with the stock itself. And I got that quote from Tom McClellan. I know it's a popular quote. It's all over the internet elsewhere, but I never heard it. And Tom McClellan gave a really good speech, and I talked a lot about this in Trading Full Circle. But he gave a speech where he talked about because this was at the American Association of Professional Technical Analysts conference, and he was talking about the fact that the people who bought the stock before you are more of a concern than all these other wonderful things, fundamentals, so to speak. And he said, and he ended his speech with, and those people will screw you. And think about it, things happen, and they might just dump that stock for no good reason, or maybe they got busted or something, and the wife got a good lawyer, and they have to raise some capital because she now gets half of the stuff. Anyway, all these were bought at brand new highs. And if you go in and look at a lot of these, you'll see, just probably pick a random one, that it probably did have a bit of a drawdown soon after buying. Not all of them go straight up right away. In fact, this one took a while to get going. It took a few weeks or even a month or so. But for the most part, it remained right at or above where it was purchased, so to speak. So that's a 478% run. Now it has drawn down significantly. It hasn't come out just yet. If it takes out probably the recent lows, I'll probably pull it out of the list. And right now I'm finding plenty of stocks to go in, so I'm kicking out more and more stocks and putting in more and more better stocks. I'm sell them and buy some good ones. Anyway, so that's a pretty decent run there. And then if you go back and look, there's pretty good runs in these. And I do publish this list on Substack for my paid subscribers, and I also publish it in Facebook for my Facebook group, Dave Landry's Trend Traders. You do have, the group is free, but you have to qualify by being a member of DaveLandry.com. You have to be a gold member or a service member. A little soft sell there. As I was going live, I was thinking of like some of the use cases for this, and obviously you can see where the money's flowing, and we'll get into that in just 1 second. One thing I've been experimenting with a little bit is, and we're kind of getting into that sort of market where it might work. A while back, and I know I've told the story 1,000 times, in 1999, I used to do this a lot too, back when the market was blowing and going. But I had one client that told me that twice, and I think one time was way back in 99, and one time in between when the market was really going straight up. He would just buy the top 4 or 5 stocks in my Landry 100 and stay in those top 4 or 5 all day. And he was actually using a free app, like a CNBC app or something, and he was just using his phone, and he would just do that trading in between his job. And he did really well. And he told me that he was able to fund 2 down payments on 2 separate investment properties. So that was kind of that made me feel really, really good, obviously. But anyway, this is kind of a similar thing here. I'm just wondering, because I was like watching some of these earlier, and they were below 10% or about 10% up on the day, and some of these are up much more on the day. So I've been experimenting with that a little bit. Now, somebody mentioned a while back volume buzz. I'm not a big fan of volume, and it's kind of a long story there. But the bottom line is, if there's a lot of volume and the stock's not going anywhere, that means there's a lot of churning, right? If there's light volume and the stock's going up, that's meaningless. Well, maybe not, because like Richard Orms, rest his soul, used to say he considers that like an ease of movement type of movement, where the stock is easily moving in one direction with little volume, and it means nobody wants to give up their stock. That's one way of looking at it. It kind of flips the script. Now, I'm not fully into Mr. Orm's research or anything, but I like his research because it kind of completely flips the script on what's normal, so to speak, about the way to interpret volume. So I can make a case for it against volume, mostly against using it, at least now. But I do keep an open mind, and I do think that there are some things that might be of use. Volume by price, for instance, and I think the VWAP is something kind of along those lines. But volume by price, when I was using those charts, puts the volume on the side like this, and it shows you where it's stacking up with price. And what's kind of cool there is, it's like you can see, okay, well, there's all this trading, there's tremendous amount of volume at this price trading, but you look at the chart and there's like a big base there, and that would make sense. So it sort of becomes a bit of an illustrator. Now, long story endless, where I'm going with this is, someone said in kind of a braggadocious fashion, And whenever somebody brags about trading, I always become really skeptical when they brag about how easy it is. But they claim that they were using volume buzz in early morning trading or pre-market trading and looking for stocks that were up big, pre-market with lots and lots of volume buzz. They claim to be printing money doing it, and maybe just caught them on a good day. I don't know, but maybe there's something there. But I have been paying a little attention to it, so you can see like this QS has 900% volume buzz, whatever. I don't know how they calculate it, but I'm guessing it's a based on some kind of average where the volume is today on that average. So a jury's still out whether or not volume buzz would be worthwhile, but in doing this Landry 100, it's kind of forcing me to look at some things that I might not have previously looked at. So might want to take a look at that. If this market keeps banging out new highs like it has been, then this relative strength type of trading might be worthwhile. As you probably know, I do some of this relative strength type of trading in crypto. So I'll sort the shit coins when Bitcoin's doing well like it is now by the biggest up, and I'll look to try to position in those. And I'll show you something I did in a little while. I'll show you a screw up I did in a little while, in fact. But anyway, you can see some big changes there today. I haven't gotten around to doing it too much, but I think it'd be kind of fun, and I know you want to party with me. I think it'd be kind of fun to take some screenshots of these early in the day and then see where they end up later in the day based on the percentage change. So my question is there a way to capture these trends intraday? And I've been experimenting with this a little bit in a very small way. Anyway, one thing obviously that comes out of it is you get to see where all the momentum is stacking up. And the one thing that I noticed, which was kind of cool, is that biotech is now my biggest area where I have, that means that that's the most momentum of all the stocks in the list. 13% is biotech. Now you could argue, I guess if you lumped all the metals together, then that would be more like 19% for all the metals and mining and stuff. But for the most part, biotech is certainly one of the biggest or second biggest, depending on how you want to count, piece of the pie. And if you look at like the IBB, which we'll look at in just a minute, it's got a lot of overhead supply, but I'm seeing a lot of setups within the sector. So maybe I don't know if it's a tail wags a dog or how do you want to look at that, but maybe there's like gaining momentum within the sector to make it worthwhile. And obviously, because these biotech stocks were all put in at brand new highs, then it's quite possible that there could be a new bull market developing there. And because they're at new highs, it means there's no overhead supply for those individual issues at least. Ideally, yeah, you want the sector to reflect what's going on with your setups and the individual stocks. But in this particular case, I'm seeing some improvement internally, and the Landry 100 is helping me to see that. But anyway, as I said a second ago, gold is the second biggest sector, and then you can see up here industrial metals and minerals 9%. So, and this is 11% for gold. I don't know if you see that or not. So that's 20% overall is in metals. Now if I'm seeing, I mean, I guess if I saw a biotech, if I had, let's say I had 5 slots to fill and there were 4 more biotechs and there were some other issues that were interesting, I might put some of those other issues that are interesting, but I'm trying to keep this list as pure as possible. So I'm not sure how big it could possibly get with one sector. And obviously in the real world, maybe that might be too much of a weighting in one particular sector. Anyway, there's all the breakdown. And again, biotechnology at 13%. Now, what's kind of cool is this, like airports and air services is one. And I think it's not HOVR, it might be Joby. So that's really kind of more of a, I guess it's now become like a defense stock. And what's kind of cool about that is it shows you like some tiny little subsector that might be worth going after. And the other example is like small scale nuclear. I forget what they have it listed as, but it's a small scale nuclear company. I think that's SMR for that one. So there's some little things that come out of this that are kind of cool. and I know you're going to party with me, but it's been a wonderful experiment, and I hope to stick with it. All right, last week and then a few weeks before that, I showed some debacles, and here's the latest debacle. And the reason I'm showing you this is, one, because momentum does end badly, okay? Usually not this badly, but it can, okay? And two, there's no money management in the Landry 100. Now, in my experiment that I did, I was buying very small positions, like $1,000 in each one, and I put in a limit order, a good till canceled, and after hours included, for 100% gain. And I've hit, can't look at the moment, but I've hit, I think, 3 or 4 on that. So those are 100% free rides, or free positions, so to speak. The problem is, you do, without buying all 100 stocks, you are going to get whacked a lot, and I did get whacked kind of a lot. I think I bought right into the market slide, as Murphy would have it. But anyway, so this was up 100%. I think if you were doing this with real money, you'd be stupid not to take off maybe half of your shares, and then that way, if the market implodes, God forbid, you at least you made something on it. And so you can see it imploded today. Now, the other thing that it's been showing, and this is the beauty of paying attention to these momentum lists, and I'm so glad that I restarted this. Now, I'll check back when we get into a choppy bear market whether or not I feel like keeping up with this list. But one thing that I've been noticing lately is a lot of these debacle du jours have been Chinese stocks. And I noticed, I'm not sure that this is a Chinese stock. I couldn't find a lot of information on it, but I found the website. And the website looks like it's in Chinese, and they're talking about products being in Hong Kong dollars. So it's Hong Kong, which technically I guess is China too, or it's now China. So I've been to Hong Kong, but I haven't been to China. But I guess I could tell people now I've been to China. These are random thoughts I talk about each week. As you just saw, it ends badly. And if you get in the bear market, obviously, as I showed before, when the market slid a while back, we had like grocery stores and drugs and things like that. But eventually, they begin to weaken too. So there's not always a bull market somewhere. And then I treat cash as an asset class. So as I take stocks out, if I can't find a new stock, which there's plenty now, but if I can't find a new stock to go in the slot, I will just leave it alone, leave it as cash, so to speak.